All right, we are live. Guys, this video is all about the Austin, Texas housing market. And not just Austin, but also the suburbs, anywhere from Wimberley and Dripping Springs, Texas to Bastrop, Texas, Taylor, Texas, all around. I bring you really data and I try to go deep on my data and bring you stuff that actually matters, things that you're not finding in the national news. And usually I have a cohort here. He's going to be joining me a little bit late today, who is a mortgage broker. And we talk about interest rates and things like that as well. But I am Chris Pesek. I'm a broker associate at Pesek Properties in Austin, Texas. And this is after hours real estate. So I've already mentioned what we do. A lot of times, since it's after hours, we grab ourselves a cocktail or a drink, and we make use of this time at home. Today, I happen to be drinking a beer from one of the best breweries in Dripping Springs. It's called Acapon. And here's Steve jumping on now. But Acapon is, they just made this beer with a buddy of mine's coffee, Mike Trevino roast, really, really good coffee, Weathered Hands coffee. And he teamed up with Acapon to make this beer that I'm choking on right now. So I'm going to let my buddy Steve, who just joined in, say hi.
We're that new, like you just started?
Brother, I just started.
Oh, I missed the intro. Whatever, that's fine. So, yeah, hi. I got a beer right here. Tor,
Yeah.
I got a Heineken for you.
Nice little Heine.
There it is. Cheers.
Cheers.
How are you?
Shelly, a friend of the show, had that beer as well. My wife brought one home for me since I was out of town last week, and it was good, Shelly. I enjoyed part of it last night and part of it right now. Man, I want to jump into some numbers because I found some interesting stuff.
Yeah, I sent you some stuff on rentals today, too.
You did.
Interesting.
The rental thing, and we'll pull up that article too after a while and check that out. Let me get my trusty dusty.
It's misleading by the title. The title is very misleading.
It's completely misleading, that's why I knew why you sent it to me. So let's. I want to look at just some real quick stuff. I'm going to have to share my whole screen. How do I do that? There it is. I pulled data on Austin and Dripping Springs today, and you can see me, so that's good. Let's talk about Dripping Springs first. You can see this, my friend?
I can.
Okay, perfect. So I want to talk about a couple of things here. Active listings up barely. Under contract is up quite a bit. So in the last month, guys, we've got some, and when I say quite a bit, the number in parentheses is what it was last month in January. So under contract, that shows me that the Dripping Springs market is kicking just a little bit. Not as good as it was 20 and 21, obviously, but look, over the last few months and over last year, that's doing really well.
Wait a minute, this is from last month, not from last year?
No, this is the last 30 days, 76 under contract in Dripping
Springs. You're
Springs,
telling me that in the last 30 days, sales prices have gone down 8%?
In Dripping Springs yet, but I'm getting there. Guy, why are you jumping ahead, man?
So, because I'm floored. Sorry. Wow. Okay, keep going. Keep going.
Yep. No, there's a couple of things. Yeah. So the things that are really interesting to me is average days on market have dropped 14% in the last 30 days. Okay. Now, is it a real 14%? No, because when I did this 60 days ago, this number was 108. So it fluctuates a little bit, right? I'm tracking this monthly. Average sales price. So you nailed it on this, down 8% over the December numbers. But the thing that's interesting to note is I haven't seen a negative number in 6 months. I went back and checked my data. Have not seen a negative number in 6 months. So
why do you think that is?
Because, dude, we've talked about it. It's the lack of inventory. The prices have not dropped. The median values have dropped because, the luxury stuff out here is not selling as well. But overall, our prices have not dropped, if any, very little. And we're down a little bit, closed the last 30 days. But these are the people that were shopping over the Christmas holidays. So that number is usually fairly low. So I just wanted to touch on Drip because that's where I am. Dude, let's jump into one that's going to blow your mind. All right. This is Austin, Texas. This is city of Austin. Look at the amount that the active listings are down.
Everybody pulled off the market.
But look at what move-in ready is. Down
And the days on market's down too. I
31%,
suppose. Wow.
and days on market is down, and average sales price keeps going up. Again, last month it went up 18,000. This month it's up 17,000. So not a lot, but it's still floating up, right?
Dude, you own a house, and every month it goes up by $17,000. You have hit the jackpot.
On
That
average.
is,
Yeah.
yeah. I mean, come on. Think about the 5% you put down, maybe 3% you put down to move in,
Yep.
and the payment you were going to make anyways that you leave and you just take a boatload of money with you. That's unreal.
Now,
That's
again,
unreal.
look, I
It shouldn't work that way.
got to step back on this. Okay, Austin has had 4 months in a row with increased average sales price, but prior to that, we had 2 down months. One was -5 and one was -6. So this all averages out over time,
Okay,
but
good.
we're seeing more positive growth than decrease. Okay, and this is what you and I have been talking about. And the biggest reason behind this, right now in all of Austin, Texas, there's over I can't remember how many listings are in the MLS right now, but in all of Austin, Texas, there are only 1,300 homes you can move into in the next 30 days. That's it. That's all. There's only 1,800 homes that you can buy, period, including new construction. That's 475 new construction homes in Austin. That's all.
Wow.
That's all the inventory that's on the market. I mean, we're talking a market that closes typically between 7,000 and 9,000 homes a year. Okay. Just bite on that for a little bit. What are I mean, what are your thoughts here, man?
With those numbers, you could still do 7 to 9,000. But I'll tell you, I think you've got this weird problem. So I just finished up today, actually, my past client annual mortgage reviews, where you call your past clients and you go over, hey, this is what your rate is. This is what the market's looking like. Are you still in the right mortgage?
Wait a minute, wait a minute, wait a minute, wait a minute. But lenders are just out to make money and then they always move on to the next deal. What are you doing?
Well, I'm trying to make money for my past clients. No, honestly,
I'm
the
about to
mortgage
start
reviews.
I'm about to start my market updates on my
And I was kidding,
my,
but yeah,
my
the mortgage review is not something to make money. It's something to help your past clients. Yes, it
yeah.
keeps you top of mind. Yes, I want them to refer me, and yes, I'm hoping they will do that. So there's I suppose there's a small ulterior motive to it, but for the most part, these calls aren't like, yeah, I got another one. It's like you get somebody on the phone, you really just help people.
Yeah.
Thanks, lady. Appreciate that. But yeah, and so I don't know, man. It's been somewhat depressing, I suppose.
Yeah.
Lots of people are in good places. There's other people that aren't in great places. I had a point to what I was saying there. I can't remember now. But one of the things I wanted to mention is I keep seeing articles now about something that you and I were predicting almost 2 years ago, I believe, but certainly a year ago. I told you that you'd see some big articles in December or January of last year, and there weren't many at all. There were whispers, but nothing crazy. But of the commercial real estate having problems. You shake your head like you know what I was going to talk about.
Yep, I've been seeing a lot of that. Been seeing a lot of it.
Yeah, because now the commercial building owners are publicly stating, well, if we can't refinance at a good rate, we might just have to let it go. And
right.
when they're being interviewed, the $80,000 a year, maybe less, journalist says, you mean you're just going to default on your loan to the bank? And these big wigs that think on a different level have responded. And I watched an interview and it was just hysterical to watch the journalist's reaction compared to the big wig. He's like, well, at some point, you have to accept the fact that the bank took a risk on us and we took a risk on that bank, and they ultimately own the asset. So if it's not performing, then they get to deal with it. Right? It was like, and I just watching the journalist. Yeah, that journalist reaction was almost like, I get why I'm poor. I understand. It was just a different level of thinking. It's hysterical to watch.
Dude, I was texting with Ryan Walker last night, former student of mine, and we were talking about this. And I don't know exactly. I don't know how I feel about it yet. I mean, yeah, we knew it was coming. You've been talking about it. I know you've been talking about it for 18 months. But of the banks that own commercial real estate loans, Okay. I forget what the total
Most, if
number of
not all
those
of them.
loans. The top 25 banks own 30% of those CRE mortgages. The top
Commercial real
25
estate. Yeah.
commercial real estate mortgages. The top 25 banks, to a tune of about $30 billion for each bank. Okay.
The real problem, though, isn't so much what they own. It's the perception of what they own.
Okay.
So let's just say they have to default on a multi-billion-dollar building, right?
Yep.
Well, they write that off on their books, and now they have less money to deal with. Well, they already are having money problems to begin with. So now you go to withdraw your money from that bank, they have much less cash on hand to help you out, and it creates a domino effect. There's something like a $100 trillion of money out in the economy when you include all of the loans that people have, but there's really only like $7 to $10 trillion of actual money in the economy. So all the rest of it's this fictitious thing that lives in assets. And so, if the assets drop in price, well, you still owe the cash.
Yeah.
Right. And so all these commercial real estate buildings, and, let's just pick on New York, right? Because that's easy. They've got, 100 buildings a block, right? It seems like. And so all the owners of those buildings, those sure thing buildings, when they start deflating, I mean, it's going to take some big banks down is what it's going to do.
But here's the other part of that. So the other 4,500 banks that own this commercial real estate empire are all like South Star,
small mom and pop shop
Bank
stuff.
of Bank of South Texas, stuff like that. And on average, I know the averages are skewed, but on average, those are all holding about 311 million in commercial real estate assets in those small banks.
That's not much divided by 1,000 banks.
No. That's the average for each of those 4,500.
That makes sense.
I've
I was
already
going to say, what are you
divided
talking about?
I've already divided.
when you start looking at the exposure and what's happened due to the pandemic, so you've got all these big buildings where you had 10,000 plus people would visit every day, and now they're down to 1,200 people, and the owners of these companies are saying, why am I spending $40,000 for my high rise unit, and some of them are $400,000 a month, right? I mean, some of them are really expensive. And why do we have this expense? Right? Why are we doing this? We can hire 10 IT people, pay them incredible amounts of money, and you know what I mean. And so they're then either getting rid of the office building or downsizing to something smaller. And it's causing major issues for everybody watching. You already know this, Chris.
Well, one of the things that is causing, and our friend Mark Sprague says this is the dumbest thing anybody could ever do, but one of the things it's causing is owners of these high rises are starting to convert them to residential. They're like, this is a big thing. And I was just reading, there's like a 300% increase in the last quarter of the number of residential units being brought on that were formerly commercial. New York City is a major one. New York City's huge in it. Oh yeah. I think it might be number one.
This is one of the few areas that I don't agree with Mark on. He looks at numbers and numbers only. I'm kind of feeling out the I guess the vibe, right? Like most people I talk to are quite happy working from home, and they have no intention of going to the office more than like a day or two a week. And some of them are like, look, I would like to go maybe 1 or 2 days a month, but for the most part, I want to stay home, right? And that would be an ideal schedule. Okay, fine. I know my wife got a job, working from home, right? And so that's just been horribly convenient. And so, I can see the world changing here. We have the ability. In the 80s, you couldn't effectively work from the house. To have an internet connection would have been astronomically expensive. You would have had a fax machine. You would have had to have all these different things that today you kind of have all built into your phone, right? Including the internet connection. And so I don't know. It's a lot easier today. I think things are really changing there.
I think where he's coming from is there's a feeling from reading that a lot of people are thinking that this is going to be affordable housing and an affordable housing solution when it's not. because you're starting over. You're basically redoing every last bit of infrastructure in these buildings, because nothing is at a capacity for residential, except for possibly the electric and HVAC. But you're essentially starting over from scratch. So it's not like you're taking this building that's now worth $25 a square foot and then putting $100 a square foot and being able to sell a condo in it for 175 or 200.
I mean, okay. But I'm also hearing of people that have their loans due for, 800 million that are letting them go for 40 million to investors in
Right.
New York City. Right.
Yeah,
And so,
absolutely.
just huge fire sales. In that case, when you snatch it for 40 million, you can afford to upgrade it to residential and then sell it back off. But you have to have some big bank fail, or at least lose the loan, I guess, as a result.
Well, but
But man,
that's
it's
what I'm saying though. If you're buying it for $25 a square foot, that's that huge reduction. Like it's not happening that much. You're talking
not here.
a million square feet, $40 million you're buying it for. Okay, well, that's $40 a square foot. And in New York, what does it cost to build? It's probably going to be 250 or 300 a square foot. Okay, so you're
You
still
just,
back at $400, 400,
I just,
$500,000 for an apartment.
I just worry a little bit.
Oh yeah,
What industry is laying off people?
tech.
Right. What's the other industry?
Oh, construction.
Oh, I was going to say I don't know. I haven't heard of any other
Oh,
industry. It's all just
no,
tech that I hear, and it's more tech, and then
construction's
more tech,
lost a
and
lot of
then
jobs. Yeah, yeah. Oh, it's tech, 100%. And then that brings up the question though, and this kind of kicks back on you a little bit. If the tech industry is what's struggling right now, um, that's the industry that's working from home.
right,
If those
right.
tech
Well,
jobs are
okay,
gone,
okay.
the work from home jobs are gone. Like now you're going to take your butt out and go work at, I don't know, Home Depot.
I can work from home. I'm not in tech.
Fair. Yeah, I shouldn't blanket it like that. But the majority of people that work from home are in some type of tech. I would think. I could be wrong. I could be wrong.
My neighbor's a lawyer. He works from home. His wife is an IT person, not IT, HR person. She works from home.
HR
Reaches
for a
out to
tech
everybody
company.
via Zoom, right?
HR for a tech company.
No, no, that'd be fun though, right?
Damn it.
You're looking for, yeah, I got it. No, no. Um,
All right. So I don't
but
anyway.
I see what you're saying though. You're not wrong. There's plenty of jobs where you have to be there, right? But I just feel like the world is changing quite a bit. There's a lot of options out there now.
This is crazy. Bus drivers $30 an hour. Really?
Yeah, and you know what? The bus driver just the other day dropped off Luke. Kid on the spectrum. He drives on the short bus, right? It's actually a short bus, and I was talking to my neighbor the other day, and he's like, "Is this your kiddo?" And I'm like, "No, that's the short one. It's the short bus." And he's like, "Oh man, like you shouldn't say it." I was like, "No, it's actually
Oh my gosh.
short bus." Yeah. Am I still there? Did I lose you?
I got you. I'm sorry.
Yeah, good. Where was I going with this?
I don't
What
know.
was I
You were
saying
talking to your neighbor. Luke got off the bus.
before I got embarrassed? Oh, now I got embarrassed and I forgot what I was saying. Oh well, it's gone again.
Anyway,
Second time.
hey, I'm gonna pop up another interesting chart that was shared to me last year. So okay, you can see me again. Let's go here.
Oh,
So
bus driver. That's what I was
bus
going to say.
driver.
Sorry. Do you realize that if when you're a bus driver, you don't just take the kids to school and then pick them up? You got to work like 8-hour shifts driving all day.
Yeah. Oh yeah.
See, I had
It's
no
full
idea. I
time
was like,
job.
it's got to be a pretty fun job. You take them to school, you take a few hours off, pick them up. Oh, all
No,
right. Sorry. Yeah.
no,
Refocus
that's
there.
not
Go
what
ahead. Go
happens.
ahead.
Okay.
10 and 2.
All right. Anyway. Okay. This other chart that I got. This is federal house. You know what it is? FHFA, federal housing something.
Oh, sure.
Yeah, so house price index, okay? And this is for all 50 states. Now, I'm going to kind of point out a couple of weird things. So this is the 1 year, year over year period that ended Q3. They haven't released Q4 yet. This is the last quarter, the 5 year, and then since they started tracking it in 91. Okay, and this is percent increase of a home, right? Seasonally adjusted. This is what house prices actually go up. When I'm showing you those other charts, that's just tracking the sales prices locally. This is tracking the actual price of houses across the country, every state, all the way around. Okay, so really interesting to me. A couple of things. First of all, number one ranked, and even in the top 5, 6 are all in the Northeast. That's crazy to me. So the Northeast right now is booming, okay, or for the last year. And I'm going to scroll down. Here's the US average, okay, and here's Texas way down here. 2.73% increase in the last year. So prices are still going up very slowly. But the interesting thing is 1.22% in the third quarter. Okay, well, if you annualize that, that's 5% in the third quarter. So if it's 2.73 in the last year, but annualized, it's over 5. Okay, that market's coming back and it's getting stronger, right? Does that make sense?
If you're using some projections, but yes.
Well, yeah, and I am, and I'm going to show you why I'm doing that in a second. And then likewise, if you go over here, okay, well, Vermont's still heating up. Okay, Maine looks like it's slowing down a little bit, and there's a couple of them in here that, where's my negatives? Or this one, South Dakota's a good one, year over year, 5%, but the last quarter only 6.4. So growth is slowing, is what I'm saying there. Growth is accelerating.
Man, look at Utah, almost a 600% increase in price.
Right. And so that's the interesting thing that I saw here. Hawaii is an outlier, but look at the majority of these that are below
300, man, 250 to 300.
Yeah. Texas is over 300, 400. What is that? Wyoming, Montana, 585, Florida, 448. That's since 91 again. But then go look at the ones that are performing really well now, and the majority of them are quite a bit less. I thought that was pretty interesting.
It's really interesting.
Like it's like the whole chart inverted in the last 18 months, and I can't quite put my finger on it in terms of why. But here's the other thing that I wanted to bring up. So this now is major metros. I don't know why Tulsa's selected. I was trying to select Austin. So Austin is number 100 and down 5% over last year from home price index. Okay. So that same chart that we were looking at here is for the state, but this is measuring the same thing over the last year and then the last quarter. Okay. So year over year change, -5, first quarter change up 1.3. And hang on, what's happening here? There we go. That's what I was trying to see. Austin Round Rock, quarter over quarter is 1.3. So again, our market is accelerating right now, especially compared to the last 3. And it goes back to, okay, this is cumulative change. Okay, we peaked here in 2022, dropped, and then we see this little fish hook accelerating again. So I saw it. I thought it was interesting. I wanted to kind of bring it up again. What we're seeing in our market is not this big decrease that everybody talks about. I hope I was able to like express that correctly. Like,
yeah, we already saw it. It was last year.
We saw it. It dropped, and it dropped 5%. That's not a huge. I just lost my light. That's not a huge, massive decrease. That's not a bubble bursting. That's a 1-year correction down 5%, and we're up 1.3 this year already.
It's a small burp.
It's a burp. That's exactly what it is.
So, but you're not popping.
That's good.
But no, honestly, it's been good. I've been really surprised with the values holding the way they have. I thought as the rates went up, that we wouldn't have that. But I mean, what the reality is, the rates got so low, and then they got so high so quickly that you couldn't afford to sell. So most people couldn't afford to sell, right? And if they could, even if they could, they chose not to sell.
Right.
And the conversation I've been having with a lot of the annual reviews that I've been doing with the people that are in like the 2 to 4% range. One of my questions is, hey, is one of your, in the future, do you have any future purchases coming up here? Do you have any, would you like to buy a second home or an investment property? Is that something you'd like to discuss? And, for those people, if they say yes, I say, well, let me just plant the seed that now that you've been in your home for more than 2 years or 1 or 2 years, depending on the, loan type, you can now rent out your house and move into another one. And you can collect rent while paying a 3% mortgage. Yep. Which, from a landlord's perspective is a landlord's dream, right? I mean, I mean, you got to think about it from the numbers perspective, and that is my man. And you know this. You and I have convinced a client not to sell their home, which you
That's
lost
right.
money on, but was the right thing to do. I'm just trying to catch you back a little bit there because you deserve it. But yeah, it's just God, man. They talk about a unique position. We were telling people to buy them too.
And that's yeah, we were, and that's it's interesting, right? Because a lot of people, I've heard stories of people that can't. Okay, taxes are going up, insurance is going way through the damn roof, and all this other stuff. And I've heard stories of people that can't actually afford their homes anymore. But I kind of started thinking about exactly what you just said. Like most of these places can keep that, or most of these people can keep that home, rent it out, and at least break even, if not cash flow a little bit, and then go buy another house. I mean,
Right.
it
Yeah.
can be done. And again, at that point you start building a little bit of a real estate empire. And, it's not necessarily about, what's in front of your face. It's kind of looking and seeing things from a bigger perspective.
Yeah. Just give me 10 years.
Man, I don't know. Something is happening with my internet today, dude. I don't know what the heck it is.
That's not fun. Maybe it's knocking out your light bulb. I'm not sure.
Oh, maybe it's your
But
phone. Maybe that's what it is. Okay.
do you think it's my phone?
It could be. I don't know. I've never had an issue with my internet, so I don't know.
Sorry, brother. I have no idea.
Regardless. All right, man. Well, let's wrap it up on that. Oh, wait. Did you want to talk about rents a little bit?
I was just going to say,
Did
you give me
email that
10
to me?
years. Say again?
You emailed that to me, didn't you?
I did. Oh, you know what? Okay, we can shift to that. Heck yeah. So I emailed an article to Chris earlier that was talking about how the Austin rental market is plummeting. It's dropping like a rock. And when you actually look at the Austin rental market in the year 2020, before the world stopped, I think our average on that article was showing that it was somewhere around like $1,900 a month. And that it jumped so high that by dropping like a rock, what they really mean to say is today it's 2,200 and change. I believe those are the numbers.
Yeah.
So it's still far higher than it was in 2020. But for a while there, it was like 2,600. It was way up there.
Yeah.
So it's what it's really doing is coming off its high. And I mean that in like a drug reference. I mean, like it was wigging out, it was freaking out, and now it's like calming down in the corner.
Yeah.
Okay, we're good. We're good now. I think this is where we are, right? And that's what rents are doing right now.
I think you texted it, and I can't find it. Damn it.
That's all right.
Anyway,
it almost looks like your Wi-Fi is off or
that
something.
Yeah, something's weird. The other thing that I took out of it is it's talking about how Austin rents are off, and they're so low and all this other stuff. Well, they also
I'm sorry. You got to look at the comment that just came in.
What did it say? Last time 49ers in Kansas City, we went into a pandemic. There you go. I mean, that's
You're welcome. Thanks for that. Thanks. You made me laugh. Sorry about that. I just totally interrupted you for that.
Just when we thought we were going to be able to start predicting something.
Dude, I was amazed that more Taylor Swift references weren't coming up last night.
This is why I hate pro football. Anyway, give me college football every day of the week. Anyway, going back into it, the other thing that I noticed about the article is that it kept talking about apartment rents. It never once referenced single family rents.
Single family homes, right?
Yep. And so the crazy part that a lot of people don't talk about it, you and I talk about it because we talk about everything, is that the last 2 years, Austin's had a record number of apartment doors delivered to the market. We were number 2 in the country in the number of apartment, and I want to say it was like 50,000 doors or something crazy. It was insane. Yeah, of course the rents dropped when you add 20% more inventory to the market. No shit.
You know what I thought this really was in terms of like a learning opportunity? I thought this was a great case study for how journalism doesn't equal professional in all professions. And so, a journalist gets some statistics on the Austin rental market and lists the statistics as an article and then gets a headline that's designed to get you to click on it. When the reality is, here's 2 professionals talking about how inaccurate and misguiding and misleading that article was. to the general population.
Yeah.
And so, I think this is just a learning opportunity as to how frustrating it can be from our perspective to see people, talk about
It
articles that are
is.
just dead wrong.
Well, and the crazy thing about it is, and I know you agree with me on this, at least to a point, is it's frustrating because you and I, frankly, don't have as big of a reach as this Austin Business Journal writer. I think it was Austin Business Journal. Wait, what was it?
I
Anyway,
don't remember.
it was a fairly major publication,
A
and
local one, but yes.
they're putting out shit information, and they're, who knows, 50, 100,000, 200,000 people are seeing this article,
Yeah.
and it's just flat out wrong. So anyway, yeah, it is frustrating. And then you and I end up combating that on a daily basis.
Right. And then imagine being the landlord. What do you mean
Yeah.
all the rents are dropping? Wait,
Yeah,
my
well,
rents aren't dropping. What are
yeah.
you talking about? Look at this article here. It says that you have to drop your rent. No, that's not what it says.
No, here you
Yeah.
can keep living here. You can go somewhere else. I'll raise my rent another 10%
So
this
bad.
year.
So bad.
I
Anyways,
mean, that's just what it is.
yeah.
Oh man. My internet's really kicking my butt, and I think it is mine. Sorry, bud.
It's all right. It's been a good show. It
I'm
was
not
good.
sure what's on, but yeah, let's wrap it up there, man. And guys, anytime that you have comments, and you know what, even if you think we're wrong, tell us. That's I want good, hearty debate. And if I'm wrong, like while ago about all the tech workers working from home, okay, fine, I was wrong, and that's fine. But this is why we do this. It's about data, it's about information, it's about knowledge and growing that knowledge. So there you go. But I appreciate it. And guys, we will see y'all next week on Monday. I should have made you get your guitar to play us